Okay, this is for the financial accounting project, final class project for Calmat University. The instructor is Professor Tong. Actually, the topic I choose is which stock between like Apple and Google, which stocks, these two, one of these two, which one is the better investment choice for the public. I will base on their balance sheet and also their income statement to do the judgment for recommendation for the public. Okay, so let's continue. Let's look at Google Incorporation's current stock price. Yeah. Okay. If you look at Google's, okay, you see the Google the current price today is closing at $678, and you look at their P ratios. Their P ratio is roughly 20.12. Okay, and market cap actually is 221 billions. Okay, then let's look at the Google's. Okay, the Google, no, Apple, sorry. The Apple's P ratio is 15.99. Okay, and their current stock price is $663, and their market cap today is like 624 billion. Actually, I think they are biggest tech company now. Okay, but their stock price roughly is the same, but which one is actually better? You see, the Google give you a P ratio of 22, and Apple has still low. It's like 15.59. So based on P ratio, okay, we can say, oh, maybe Apple is a better choice. Is that true for the investment? Okay, then let's look at their balance sheet. Actually, normally in the Yahoo we can see their income statement, right? So let's go to the Google's income statement. Okay, if you see the Google's income statement, basically normally we see like first in the income statement we can see the yearly like annual income statement. Okay, for like ending of December 2011, and Google's total revenue is roughly 37 billions. Okay, and that their net revenue, okay, that's also one important thing. Their net income is close to 9 billions. So if you look at their income statement here, okay, sorry, I look at income statement here. Normally we look at of course the revenue and net income, but we also look at the growth rate. You look from December 2010, like a year before, their total revenue is 29 billions, and the net income actually is 8.5 billions. So you can calculate roughly the growth rate is close to 12%. Okay, I would say the net income is roughly 12%, and about the revenue growth, it's close to 30 to 40%, 33%. Okay, that's pretty much tell you the Google's growing pattern is roughly 33% yearly, and net profit actually doesn't increase as much as the growth rate. So net profit increased like 12%. Okay, so this is first things, okay, about like Google. You see, their revenue, remember, is around 37 billions, and their net income is roughly 9.7 billions. Okay, let's look at Apple's. Okay, let's see what Apple give you the income statement. For Apple's income statement, actually, is, you look at 2011, net revenue is 108 billion. Actually, you can see it's better than Google's. And their gross profit actually is 25 billions. So also better than the Google's. But I think important thing is the growth rate. Actually, normally we look at the growth rate from 2010 to 2011, from 25 to 43. So their growth rate roughly is almost close to 85% in the revenue. Okay, revenue is actually 108 compared to 65. Actually, almost it's still about 80%. And their net income growth, like say, compare just the top line to 25 to 14. So I would say roughly they get also like 80% increase. So based on this, actually, Apple actually is year to year net income growth rate is like 80%, and revenue growth rate is roughly 80%. And actually, you look at the Google's their year to year revenue increase like only 40%, and their net profit only like 15%. So apparently, based on the income statement, Apple is a better investment than Google at this point. Then we look at how healthy is their balance sheet. That means how much money they own, how much money they still they have access. Okay, so I look at the Google's the balance sheet. The important thing is the net tangible assets. You can see the normally in the balance sheet you have a so-called current asset. Okay, the current asset include like your cash, short-term investment, cash, short-term investment, net, the inventory, other stuff, and also your total current asset include the long terms, investment, goodwills, accumulate assets, and as we know, the asset equal to liability plus equity. So there's a liability terms, liabilities, current liability or account payables, also like short-term, long-term debt, and total current liabilities, and you have stockholders' equities, and so you have a net tangible asset, which is important. That means you indeed it's your more like your total stock. Actually, your total stockholder equity and the net tangible asset normally it means how healthy is your company's financial statement. If you look at this one, basically one is 58 billion, 49 billions, and the other one, you look at Apple's, it's 25 billions. Sorry, it's not balance sheet yet. Okay, Apple actually is 72, almost almost 3 times as bigger as the Google's. So from that point of view, even their balance sheet actually, Apple looks got more asset than Google, about 3 times big asset, and growth rate is like 80% than Google's. And also the last one we can see is the cash flow. That's normally you can take a quick see of the cash flow. Okay, changing the cash, you can look at cash flow. But cash flow is not indeed determine the stock price. It's only show how much cash, quick cash you have in hands. I believe the total cash flow in Apple's is 1 billion. I think this is not so important. Yeah. So I think based on the income statement, Okay, both sides income statement, both Apple and Google income statement. Apparently, Google get a growth better, like 80% year to year, and no, sorry, Apple get better growth rate year to year, like 80%, and Google only get like 40% growth rate. And net income also Google only like 15% growth rate, and Apple have like 80% growth rate. And balance sheet actually Google, but Apple actually has better net asset and also stock equity, stock holder equity. So in that case, I would say Apple is a better investment.